Will Facebook continue to rally, or is there a correction on the horizon? First off, read this disclaimer carefully. This here is Facebook's website for investors. They do have a nice portfolio of products. The major presence they have, of course, that is in social media. I categorize Facebook here under Zeitgeist, and I call it social artificial intelligence / machine learning, because that is how Facebook makes money. It's all about their ability to understand what kind of ads their users are most likely to click on and do a purchase through. Hence, it is critical for Facebook to understand human psychology. As such, you could make a very strong case that yes, social artificial intelligence is the essence of Facebook. Okay, this is the investor relations page. Yeah, they have this social consciousness. Let's look a bit at what they do. Of course, they do have Facebook. They have Messenger, Instagram, WhatsApp, Oculus, which is in the virtual reality space. They are also pushing the workplace platform. They also have Portal and Novi. Let's see if they have a bit more additional information about it. Okay. Novi, a connected wallet for a connected world. Novi makes it simple, secure, and instant to send, spend, and receive digital payments in Messenger and so on. Novi is for the Libra payment system and uses blockchain technology. This is very, very interesting. The thing is that Facebook is going to get some extremely powerful enemies by getting into this space. And hopefully they do not have a naive approach to it. Because when you get into the money space, that's when you really are getting some powerful enemies. But good luck to Facebook on that project. It is very interesting, but I hope they really understand what they're getting themselves into. Portal. If you can't be there, feel there. Facebook's Portal family of video calling devices makes it easier to feel connected with your closest friends and family when you're miles apart. Portal's AI-powered smart camera pans and zooms to stay with the action so you can move and talk freely while always being in frame. This is also very, very interesting. Yeah, they do have a nice portfolio of products. Everything is basically about understanding humans. So the order of the day, we will first look a bit at the seasonality of the stock. Then we will look at some of the rotations happening in the industries on the market. Then the charts, fundamentals, quick segment about price to sales ratio, very important. And then we will look at the S&P 500. Let's start here by looking a bit at the seasonality of the Facebook stock, the percentage of months in which Facebook closed higher than it opened between these periods. You can see that June and July are some of the strongest months for Facebook. That is interesting. We are currently in May. Let's zoom out a bit. Well, let's go to the more recent times, 2016 to 2020. Obviously, we do not have data for October for 2020, that obviously, or the months after, because we are now in May. Anyway, yes, you can see that May has been a good month. April been super strong. June has actually been a weaker month as of late. Hence, there is some changes here when it comes to the seasonality. Let's now actually look at something very interesting here, and this is a list of the major sector ETFs, and it can show us how their strength is shifting. Here we have lagging, weakening, improving, leading. XLK is the ETF that is the tech ETF, which is the closest one to Facebook. So let's look a bit at the rotations. Okay, here you can see XLK. So during this major crash in the market, XLK was strong. And let's continue. So here is XLK. Here you can see it changing. So here we have the rally in the market. In this instance, XLK actually becomes weakening. So that's interesting. Let's continue. It's a bit of a mess. Then XLK goes back into leading. What is the most recent developments? Okay, so let's zoom out a bit, like that. So here you can see that XLK is going back into weakening. And you can see that some of the others, if you look at the trends, you can see like XLE as an example was here. Here it was lagging, and then it starts to improve. And then you can see XLE is leading. So there is these rotations, and that's very important to be aware of. Okay, let's jump into the charts. Here you have the Facebook chart, weekly data points. This is all the data we have. It is up 491%. That's obviously very bullish. However, throughout all of this history, all of the history we have with this stock, this move is rather unprecedented. So let's measure this rally here, from here to there. That was 118%, but that was with some solid breaks. Let's take this rally right here, 33%. If we measure this rally here, 57%. Okay, there's been a really aggressive move. I mean, this move here is just unprecedented in how quickly we rallied. Something that is interesting to see is that the RSI for the current move is actually lower than it was here. So there is a bearish divergence when it comes to the RSI. The correlation with the S&P 500 is 70%, so that's rather strong. Zooming in, we can see that there is some fatigue in this current week, okay? Meaning there could be some rotation happening. Meaning there could be a short selling opportunity for Facebook. To be perfectly clear, long term, I am bullish on Facebook. Social artificial intelligence will be a very powerful trend. Facebook has it has a rather strong hold on that trend as well, but that is very contingent on their ability to acquire new innovators, because Facebook itself has been very stagnant when it comes to innovation, which is very typical of large companies. They just stagnate. They are very flexible in the beginning, very adaptive and hip and cool, but then they become fossilized, and they can only really innovate by acquisitions. But they have done some good acquisitions. So let's look. So here are the daily data points. You are seeing some weakness today as well. So this looks rather short. This could, temporarily, for the coming months, there could be some shorting opportunity here. It seems like that's the case. If you look at RSI, we were very overextended. Yeah. I mean, we will look at some additional data that strengthens the case for a very temporary short selling opportunity. Even though the long-term picture is very bullish, there is some fatigue here with the accumulation distribution as well. Yeah. Okay, let's look at some additional data. Let's go here to Finwiz. So here you can see, some of the fundamentals, the peg, the price to book is pretty crazy. It's arguably gone a bit too far too fast. The recommendation rating is at 2. The analysts are rather bullish, but that also means that the analysts, who are very bullish, they can only downgrade. And when you look at the analyst price targets, okay, even though the price is currently for Facebook is at $232, the price target here is $237. If we do the math, that's 2% above the current level, okay? So from a shorting opportunity, that's basically your risk as far as the price targets goes. Yeah, you could make a strong case that the good news are priced in. This stock is very due for a pullback, which you could do it through shorting Facebook or sit on the sidelines and waiting for a better opportunity to get into the stock. Let's go to Saks.com. They have a number 3 hold on Facebook, a C value score, B growth, B momentum. The Facebook does not pay a dividend. Yes. Let's have this segment about price to sales ratio, the PS. That's one of the ratios you will see a lot. So here's a basic introduction. Okay, it's a valuation ratio that compares the stock price to company revenues. Yes. Determined by dividing the company's market capitalization by its revenue. Okay, let's continue. Revenue generated by sales of the company's products and services. This ratio is calculated on a trailing 12-month basis, which basically means the last 4 quarters. Okay, so what is the benefits like of the sale price to sales ratio? So it is very useful when evaluating companies with little or no profits. Facebook, it does, have some profits, of course. The price to sales is a great way to avoid the typical value trap logic. Yeah, this is very, very true. Because, the value trap is that, and this is the typical thing when people get into fundamental analysis, they start to look at income statements and all of that. It's very easy to start to think that you would only invest in companies that have very little debt and have a very low PE and so on and so forth. But that becomes a bit myopic. You need to look at the bigger picture because there are many other indicators that will tell you something about the company. And one of the most important things, in my opinion, in order to really understand the investment case, is to look at the company's ability to market itself and to sell. That is, at the end of the day, the most important thing, which is one of the reasons why I am quite fond of the price to sales ratio. It is very great for comparing stocks in the same industry and similar business models. Earnings and book value is easier to manipulate on an income statement than sales figures. Yeah, because sales, it is very clear and objective. At the end of the day, it is about getting that sale. Always be closing. Price to sales numbers. They were used quite manipulatively during the dot-com bubble, and generally speaking, sales numbers can be very deceptive in the tech space. Back in the dot-com days, you would literally have companies buying services from each other, digital services, and just making imaginary prices for it. And that would seem like they were getting all of this business, but they were just basically moving money around, Facebook makes the vast majority of the money on advertising. And that is typical of most companies in the social artificial intelligence theme. And because of that, they all need to really, really understand human psychology. And as such, they are characteristically very different from the other artificial intelligence theme I have, and that's what I call business artificial intelligence and machine learning. This is more about understanding, I guess you could say, more inherently quantitative data. While social artificial intelligence, it does its magic on essentially more qualitative data, because from the get-go, the liking you do on Facebook and the comments you write and the images, it is very qualitative. But of course, Facebook, they do have models that are able to analyze all the comments and to categorize it. Like look at the adjectives, look at the strengths also of the adjectives, what kind of things you comment about. So as an example, let's say that you talk a lot about fishing on Facebook all the time. Fishing, I went to another fishing trip and got a big fish, and I had a very good success with some lure. If you write about stuff like that, it is not a coincidence that you will see more ads for fishing products, because that has been your expressed interest. And it is in Facebook's interest, your interest, and Facebook's advertisers' interest for you to see ads that are relevant to you. This is one of the paradoxes of privacy, because back in the day, when the internet was very, private, it was very anonymous, there was very little tracking, you would get extremely irrelevant ads. Like when I was, 10 years old, I would get ads about Viagra. Obviously, there's not a lot of 10-year-olds using Viagra. It made no sense. And as I aged, I have experienced, being born in the era of the internet. I was born in 1989, literally the year the World Wide Web was invented. And I've seen the ads become more and more relevant to me, even to a more disturbing degree. Okay. Whatever you do, of course, with Facebook, you want to let the trend be your friend. As always, when you invest, long term, to be perfectly clear, I am bullish on Facebook. The nagging thing I have with Facebook is that they are a large company that has shown a very weak ability to innovate themselves. The innovation has primarily been through acquisitions. That is a bit of a risk. When it comes to the shorter time frame, the coming months, the charts and some of the fundamentals quite clearly suggested that there could be some bearish opportunities.